What's up guys, William Ryan here back with another video, and in this video I'm going to be going over some advanced timing and pricing elements. And again, I must say before we hop into this video, we do not need this for profitability. Okay, we need to burn the fractal, we need to burn optimal advance into our mind, right? Become aware of the framework, right? The SMT and the William % indicating an internal range liquidity change in state of delivery, right? So when we have SMT in the price chart, right, and in the William %R, so the William %R is taking out a low, but we're failing to do so in the price chart when we come into a discount, okay, balanced price range, fair value gap, right? This is indicating to us a change in state of delivery. Okay, I'm not going to be going too far in depth in that because I've done so already in previous videos. If you haven't checked out my recent videos, go back and check them out, okay, before you watch this video, right? So in this video, I'm going to be bringing those concepts together with more advanced timing and pricing elements, okay? And so we're going to be looking here, just going to be going over the time of day very, very quick. And so the times of day that I really like to focus on are 3, 6, 9, and 12, whether that be AM or PM, right? Because 3 comes right in the middle of London session. Okay, so London session starts for me at 2 to 5 a.m., right? And 3 comes right smack dab in the middle of that session. Okay, so that is the sweet spot of the session. And so very similar, we have 9. Okay, it comes right in the middle of New York session, right? New York session for me is from 7 to 11 a.m. and 9 is right in the middle of that, right? So that's the sweet spot for that session. And then 12, okay, 12 is obviously opening price, right? And halfway between the full 24-hour trading day, okay? 6 is kind of a one-off, right? Because it's right after London session. Okay, 6 is right after London session, and it's after pretty much the trading day in the PM, right? So 6 we're kind of going to want to put to the side, and we're going to want to focus on that 3, 9, and 12. Okay, very, very important times of the day that we must be aware of, right? So looking at this fractal here, this is on AUD JAPI on a 1-minute chart, right? And this time, right, this high here gets created at 12:30, right? So it's within that 12 o'clock hour, that 12 to 1 hour, okay? So we can see the time element here, right, is a factor, okay? So we're within that window of time that we like to see these market maker models unfold, right? And for those of you who don't trade Asia, Asia is a very fruitful market because the dollar is typically consolidating at this time, right? The dollar is not moving. And so if one market, right, specifically the dollar is consolidating or not moving, right, we're going to want to be looking for opportunities in Asia session. Okay, and let me tell you this, Asia is one of the most underrated sessions, okay, in terms of optimal advance, right? I actually it's very true, to be honest. It's not, I don't think, but it's true. Optimal advance is more effective, and the setups become more frequent in the crosses, okay, just in general across the 24-hour period than the majors, right? So if you're trading Forex, guys, I highly recommend you go check out the crosses, much cleaner price action, and we get optimal advance more frequently throughout the day, right? And so we're going to dive right into price. So price is going to be the highlight of this video. And we're going to dive into the ranges, right? So we have an optimal advance set up here, right? One on the buy side of the curve and then one on the sell side of the curve. And so we're going to take a deeper dive in looking at the ranges as well as the price. Okay, so we're going to look at the retracement here from this high to this low. Okay, 6.5 pips, right? And so this is one of the numbers that we look for, right? So we can see this theory right, holding true, specifically in this market maker model. And again, it's not going to be perfect every single time, guys, because if it was, it would be way too easy to predict. And obviously we know trading is very, very difficult. And so if it was perfect every single time in every single model, right, trading would be very, very easy. And that's not always the case. So in the range expansion to the high, okay, how many pips do we expand? 10, right? So we look for that number here as well at optimal advance, right? So we can see that theory down here holding true in this particular example, right? So the price in here in this fair value gap balance price range, right? We have that 50 level. So the 550, if you guys look at the right of your screen, or the right of this screen, 96.550, right? The 35 is down here, but we don't quite get to it. So that 50 level is kind of where we want to be getting in, and where we can anticipate smart money to accumulate longs, right? Obviously with the William %R characteristic. Okay, moving right along, we're going to be looking at the sell side of the curve. So from this range low to this range high, how many points does it move higher? Excuse me. We move 5 points or 5 pips higher. And again, this is one of the levels, right? One of the numbers that we look for. We can anticipate price to pull back, right? So the ranges that you guys see in price, a lot of times are going to come in the form of 20 pips, 35 pips, 50 pips, 65 pips, 80 pips, or 100 pips. We could also apply that to micro time frames, right? Like in this example here, this is only 5 pips. This is a 5 pip retracement, right? And so looking at the expansion, price again expands 10 pips. 10 pips, right? And this is one of the numbers that we look for once again. So we can clearly see that this theory is holding true, right? The time is holding true. There's a high created here within that 12 o'clock hour, right? And we get optimal advanced setups, right, within that important hour of time that we look for, right? So guys, I hope this got your brain moving and start to think a little bit more about the ranges that are forming, as well as the time, right? Taking a deeper dive into time. So with that being said, guys, I want you guys to back test, okay, times of day, back test this on an hourly chart, okay, and you're going to find some very useful insights, okay, and the price as well. So whenever we're studying the market maker models, right, I want you guys to start studying the ranges, okay, study the ranges between, right, the retracement high to low, and then study the expansion. How far does price go before creating a high, right? And same thing on the sell side. So we want to be looking at the retracements. How many pips does it retrace, or how many points does it retrace into our optimal advanced setup, right? And how many pips does price expand lower, okay, before creating the low, right? So with that being said, guys, I hope you guys found this video insightful. Until next time, good luck, good trading.